Welcome in, everybody. Ready to dive deep into CK Asset Holdings. We're taking on their 2023 annual report today. Really going to break down this massive company, how they make money, what their financials look like, and what they're doing to try and make money for their shareholders. By the end of this deep dive, you'll really understand what makes CK Asset Holdings tick and what their future might hold.
Absolutely. It's a company that really shows you what diversification is all about, truly global, from those iconic Hong Kong skyscrapers to, you wouldn't believe it, pubs in the UK.
Okay, so let's break down how they actually make money, those four main business segments. Development properties is probably the first thing people think of, right, when they hear CK Asset Holdings.
Yeah, that's their core business for sure. They've got projects everywhere, Hong Kong, mainland China, the UK, Singapore, and they're proud of it, you can tell. The year at a glance section of the report, it's like a highlight reel of all their projects.
And these aren't small-time projects either. We're talking huge, ambitious developments. They even list a whole schedule of these major properties, like Noble Hills in Guangzhou, a massive residential project, Emerald Cove in Huizhou, that combines residential and commercial space, and then the redevelopment of Chung Kong Center 2 in Hong Kong. Seems like they're going big, especially in mainland China.
Makes sense strategically. China's urbanizing, it's a trend that's going to last for a while, and CK Asset Holdings is making sure they benefit from that growth. But they're also branching out beyond just building and selling. That's where their investment properties segment comes in.
Right, this is where they hold on to properties that make that steady rental income. Flagship properties like Chung Kong Center and 1881 Heritage in Hong Kong, those are in this category, but they're not just sitting still with what they've already got.
No, not at all. That recent acquisition of Civitas, the UK's social care housing provider, that's a perfect example of how they're growing in this segment. It's a whole different market, potential for steady long-term returns. A bet on the aging population in the UK and the rising demand for this type of housing.
So they're thinking ahead,
Hmm.
finding those trends, and changing their portfolio to match. It's more than just building the flashiest new skyscraper.
Exactly. It's about a sustainable business model, one that can survive those economic ups and downs and that can make the most of new opportunities as they come up. That kind of forward thinking, you see it in their hotel and service suite operation too.
Now, hotels, those are a bit more sensitive to the economy, aren't they? Tourism, that can change quickly.
Yeah, it can be fickle, but CK Asset Holdings has found clever ways to position themselves there too. Take their service suites, for example. They've got a 90% occupancy rate, focusing on those long-stay guests. That creates a much steadier income than relying on short-term tourist traffic.
Interesting how they're mitigating those risks in each segment. And then there's the unexpected one, the one that probably makes people do a double take, their pub operation.
That's definitely the surprising one. They own Green King, a big pub and brewery chain in the UK.
Seems like a completely different world compared to their other businesses. What's the thinking there?
It's another part of their diversification strategy, though it has had its share of struggles in this economic climate. Inflation, costs going up, consumer habits changing. The pub industry is definitely feeling it.
Good reminder that even giants like CK Asset Holdings can't escape those global pressures. Okay, so we got these different business segments, but how do they all fit into an overall growth strategy?
The keywords you see in their report: optimize and broaden. They want to refine their property development portfolio while also making those recurring income streams bigger. It's all about balance, achieving sustainable returns over the long term. And that brings us perfectly to their financials, where we can actually see this strategy playing out in the numbers.
Let's dive into those numbers then, because let's face it, for a lot of people, that's what success boils down to. Now, one thing that jumps out is that the report mentions a 10.2% decrease in profit attributable to shareholders for 2023. Not exactly a reason to celebrate.
No, not the best news, but like always, it's all about context. The chairman's statement talks about how tough the global economic environment is. So before we hit the panic button, we need to figure out how much of that decline was because of things outside CK Asset Holdings' control and how much was because of internal issues.
Right, so everyone's feeling the squeeze. But how do their different business segments actually perform? What do they contribute to the revenue?
Well, property sales are still a big chunk, followed by rental income from their investment properties. Then you've got hotels and pubs, and a smaller bit from infrastructure projects. It's worth pointing out, though, the cash flow statement shows a pretty big outflow tied to that acquisition of Civitas.
Ah, so that move into social care housing, a strategic move, but it came with a big upfront cost. Be interesting to see how that pays off in the long run.
Absolutely, it's a bet on the future, a calculated risk. And speaking of risks, the report's pretty open about those. They have a whole section dedicated to risk factors outlining the potential challenges they're up against.
Yeah, this is where things get real. A lot of companies try to downplay the negatives,
Mm.
but CK Asset Holdings seems pretty upfront about what could go wrong.
I think that's smart, especially for potential investors. You want to know what you're getting into, both the good and the bad.
Okay, so what are some of the key risks they highlight? What should we be watching out for?
Global economic uncertainty, that's the elephant in the room. They specifically mention things like inflation, interest rate hikes, and those geopolitical tensions, all impacting businesses around the world.
Yeah, everyone's worried about those these days. But what about the risks specific to their different business segments?
They cover those too. Like in property development, they acknowledge that construction materials and labor are getting more expensive, possibility of projects being delayed, and the ups and downs of the real estate market itself.
It's a high-stakes game. A lot can go wrong, especially in this current climate.
Exactly. And when it comes to hotels, they're very aware of the fact that it's a cyclical business. The economy takes a hit, travel gets disrupted, and suddenly your occupancy rates plummet. They saw this firsthand during the pandemic, so they know how vulnerable that part of their business can be.
So at least they're going into this with their eyes wide open, not pretending that everything's perfect.
Exactly. Being realistic about the challenges, which lets them plan better and come up with strategies to minimize those risks.
Well, we've covered a lot already, how their different businesses work, their financial performance, the risks they're facing. But we're missing one big piece of the puzzle. What about us, the potential shareholders? What's in it for us?
Great question. And that's exactly where we'll pick up in part two of our deep dive. We'll look at how CK Asset Holdings tries to create value for its shareholders, their history of paying dividends, and the possibility of share buybacks.
Sounds like we're just getting to the good stuff. Don't go anywhere. We'll be right back with part two of our CK Asset Holdings deep dive after a quick break. Okay, so we're back. And I think the big question on everyone's mind is, what is CK Asset Holdings actually doing to reward its shareholders?
Yeah, that's the key question for any investor, right? And their approach is multifaceted, you could say. But the cornerstone is dividends. They've got a solid track record of paying those out consistently. And the report even lays out, specific dividends per share for the past few years.
That's good to see. Consistency is key for investors, especially now with all the economic uncertainty. But, some companies talk a good game about shareholder value, and then they fall short when things get tough. How does CK Asset Holdings stack up there?
Well, even though, like we saw, their profit dipped in 2023, they kept paying those dividends. That says a lot, right? It's a signal that they're committed to those shareholders even when they're facing challenges.
Definitely a point in their favor. But dividends are only one piece of the puzzle. What about other strategies? Share buybacks, things like that.
Share buybacks weren't specifically mentioned in the report, but it is a tool they could definitely use to, increase shareholder value. Wouldn't be surprised if they consider that in the future, especially if they think their shares are undervalued.
It's like they have a few different ways to keep those shareholders happy. But let's be realistic. Commitment to shareholders is only as good as the company's ability to, make money and handle those risks we talked about.
Absolutely. Shareholder value doesn't just happen. It's a direct result of how financially healthy the company is and the strategic decisions they make.
So let's go back to those risk factors for a second. We touched on them earlier, but I think it's worth going a bit deeper, especially for those of us who might be thinking about investing in CK Asset Holdings.
Yeah, I agree. The risk factors section, it's always one of the most interesting parts of any annual report. It gives you a sense of what's keeping those executives up at night.
Like a behind-the-scenes look, right? What are they worried about? How are they getting ready for potential problems?
Well, we already mentioned that global economic uncertainty, that's a big one. They're not the only ones dealing with that, of course, but it's clearly something they're keeping an eye on.
But then there are those risks that are specific to each industry, right?
Right.
Every business segment has its own set of challenges.
Yeah, for sure. And they break those down in detail. In property development, for example, they mention the rising cost of materials, labor, the chance of projects being delayed, and of course, the ups and downs of the real estate market itself.
It makes you realize, even with all the planning in the world, a lot of things can impact a major development project.
And in the hotel industry, they're dealing with things like energy costs going through the roof, staff shortages, and still that uncertainty around travel demand post-pandemic.
So it's all about finding that balance, right? Trying to anticipate those challenges and do what they can to minimize them. But what about their pubs in the UK?
Yeah.
That seems like a particularly tough spot to be in right now.
It does. They specifically talk about, well, the impact of Brexit, supply chain issues that just won't go away, and costs going up across the board. Energy prices, ingredients, everything's eating into their profits.
Not a great time to be in the hospitality business, especially in the UK with all the economic headwinds they're facing.
Yeah.
But what about those risks that are less about external factors and more about how CK Asset Holdings operates internally?
You're right. That's important too. And they actually spend a good chunk of their risk factors section talking about cybersecurity. They highlight how sophisticated cyber attacks are becoming and the damage they can cause.
Yeah, data breaches, system outages. It's a nightmare scenario for any company, but especially one as big and complex as CK Asset Holdings. They're a prime target for that kind of thing.
Definitely. And they acknowledge that trying to prevent and respond to these attacks, it's expensive, and there's no guarantee you can be completely protected.
Makes you realize that in this day and age, security is everything.
It really is. And it's not just about the tech, it's about the people and the processes too. It sounds like CK Asset Holdings is taking a multi-pronged approach, putting security measures in place across the whole company. It's a constant battle, though.
Okay, so they've got all these external pressures, internal vulnerabilities, but what are they actually doing to manage all of these risks?
They describe a pretty comprehensive risk management framework in the report. It involves oversight from the board of directors, dedicated committees that focus on things like auditing and risk management, and a system for identifying, assessing, and mitigating potential threats.
So they're not just sitting back and hoping for the best. There's an actual plan in place.
Right. And it's a plan that's all about constantly improving, adapting to new threats as they pop up. No system is perfect, but they're being proactive, strategic about how they approach risk management.
Well, all this talk about risk is making me nervous. Let's switch gears for a minute and talk about the positive stuff. What are the opportunities out there for CK Asset Holdings? Where's the growth going to come from?
Their diversification strategy, that's key. By investing in different sectors in different parts of the world, they're not overly dependent on any single market or industry.
Like they say, don't put all your eggs in one basket.
Right. Exactly. And they're actively looking for strategic acquisitions, like that Civitas deal we talked about. It's a way to grow those steady income streams and get into new markets with long-term potential.
So they're not just sticking with what they've already built. They're looking to expand and evolve. But do they give any hints about what specific opportunities they might be interested in going forward?
They're a bit vague on the specifics, understandably so. But they emphasize their focus on sustainable returns. They're looking for investments that generate value over the long term, not just quick profits.
Sounds like they're playing the long game, which is a good sign for long-term investors like us. But let's be honest, predicting the future is tough. How do we actually assess a company like CK Asset Holdings moving forward? How do we know if they're really in a good position for success?
It's a tough question, and there's no easy answer. We have to consider everything we've talked about. How their business operates, their financials, their risk management, their growth plans, and of course, the overall economic and geopolitical climate.
Like trying to solve this giant puzzle with all these moving pieces.
That's a good way to put it. But I think we've built a solid foundation. We've gone through the key elements of CK Asset Holdings business, identified both the challenges and the opportunities they're facing.
So now it's time to put all those pieces together and see what the picture looks like.
Right. And that's exactly what we'll do in the final part of our deep dives. We'll try to answer the big question. What does the future hold for CK Asset Holdings?
Okay, so here we are, the final part of our CK Asset Holdings deep dive. We've gone through their business segments, analyzed their financials, even peeked into how they handle risk. But the big question remains, what does the future hold for this massive company?
Yeah, this is where we try to put all the pieces together, right? Look everything we've learned and make some educated guesses about what's next for CK Asset Holdings.
And I gotta say, after all this, I'm still not sure what to think. They've got this incredible track record, such a diverse portfolio, they seem to know how to adapt. But the world is a pretty crazy place right now, and even the big players can get knocked around.
It's that tension, isn't it? Those forces that shape every business, big or small. But I think to really understand where CK Asset Holdings might be going, we have to look at how they fit into the bigger picture, those global trends that are changing the world.
So, big picture time. What are those huge trends that could either make CK Asset Holdings soar or send them crashing down in the next few years?
One you can't ignore is sustainability. Everyone's talking about it, investors, consumers, governments. It's all about a company's ESG, their environmental, social, and governance practices.
ESG, right? The big buzzword these days.
Mhm.
But does it really make a difference to a company's bottom line?
It does, more and more. Investors use ESG to decide where to put their money. Consumers want to support companies that share their values. So ignoring ESG, that's a risky move for any company.
So how does CK Asset Holdings measure up on that front? Are they actually doing what they say, or is it all just for show?
They're definitely saying all the right things. They have a whole sustainability committee, ambitious goals. They put out detailed reports on their ESG performance.
It sounds like they're checking all the boxes. But we all know actions speak louder than words. We need to look closer at their actual projects, their initiatives, to know for sure.
Right. Having a fancy sustainability report is one thing. Actually doing things sustainably across the entire company, that's what matters.
Okay, so ESG, that's a big one. What else is on the radar?
Technology, for sure. The rise of AI, big data, automation. It's changing everything so fast.
And CK Asset Holdings, with their focus on more traditional industries, property development, hospitality, you might think they'd be slow to adapt to this whole digital revolution.
That's a fair point.
Yeah.
But their report does mention the importance of cybersecurity, so they're definitely aware of the threats out there. And I'm sure they're looking for ways to use technology to streamline their operations, make things more efficient.
So it's about finding that balance, right? Taking advantage of what technology offers without losing sight of what they're good at.
Exactly. And then there's geopolitics, something you can never forget. The world's getting more interconnected, but also more volatile, harder to predict.
Yeah, we're seeing that play out every day. Trade wars, political instability, power shifts all over the globe.
And CK Asset Holdings, they're all over the world, so they're exposed to risks everywhere. They need to be able to react quickly, navigate all that complexity, adapt their strategies as things change.
That's a lot to ask. But they do have a lot of experience operating in different, often difficult environments. Maybe that gives them an advantage.
Possibly, yeah. Experience counts for a lot, especially in uncertain times. It helps you anticipate problems, respond better when unexpected things happen.
But experience alone isn't enough. You need the right leadership, people who can make the tough decisions, steer the company through the rough patches.
Which reminds us of that interesting trust structure we talked about. Mr. Li Ka-shing, even though he's not directly involved anymore, his influence is still there, something to consider.
It's a bit of a wild card, isn't it?
Mm-hmm.
Will his vision, his values, continue to shape CK Asset Holdings? Or will the new leadership take things in a different direction?
I guess we'll have to wait and see, but it definitely adds another layer of complexity when we try to predict the company's future.
Okay, so after all this analysis, all this digging into their annual report, what's the verdict? Is CK Asset Holdings a buy, a hold, or a sell?
Oh, if only it were that easy. Investing, it's never that simple. There's always some level of risk, some unknowns.
But we have to come to some sort of conclusion, right?
Yeah.
What are your big takeaways? What should our listeners be thinking about when they're making their own investment decisions?
I think CK Asset Holdings is at a turning point. They've got a solid base to work with, a diverse range of businesses, a history of success, but they've also got some major challenges.
Yeah.
All the global uncertainty, changing investor expectations, this need to adapt to technology quickly.
So it's a bit of a mixed bag. Potential for growth, but also plenty of risks to consider.
That's it in a nutshell. And in the end, whether or not to invest in CK Asset Holdings, that comes down to each individual investor, their risk tolerance, their investment goals, and their own assessment of how well the company can navigate those challenges and seize the opportunities that come their way.
A lot to think about, but I think we've given our listeners the information and the insights they need to make that decision.
That's what we aim for with the deep dive, right? We're not giving financial advice. We want it to empower people, help them think critically.
So as always, we encourage you to do your own research, read that full annual report, and come to your own conclusions.
That's the beauty of investing. There's no single right answer. It's about making informed decisions based on your own situation.
This has been a fascinating journey. We've covered a lot of ground, and I feel like I've learned a lot about CK Asset Holdings and the things that are shaping businesses around the world.
It's been great exploring all this with you. Who knows, maybe in a year or two, we'll circle back to CK Asset Holdings and see how things have played out.
I like that idea. Check in on their progress, see how they've handled those challenges and opportunities, maybe get a glimpse of what's next for them.
Until then, keep learning, keep exploring, and keep those deep dives going.
Thanks for joining us, everyone.